Hey everyone, welcome to a new video. Today we're going to go very deep, in depth. We're going to talk about taxes. We're going to be talking about banking, LLCs, how to do basically everything you need to know around taxes with print on demand. I will kind of say that this is for Americans. I really don't know how it works for people in Canada or people in different countries. Like I said, I have no idea. I'm an American citizen, so let's talk about that for print on demand. Guys, the first thing that we need to understand is that we are technically contractors, which receive what we call 1099s. Now, I want you to be aware, though, however, that some things are changing with the law. In fact, they've already been put into place. I believe it was April 9th, where there was a law put into place that Biden and his administration kind of changed how 1099s are determined. And for that reason, next year's taxes could be a little bit wonky. It just depends on what print-on-demand sites decide to elect us as employees or as contractors. Now, that's going to be a different video for a different time. I don't want to get too deep into this, but today is April 13th. Of course, taxes are due on the 15th. And so I wanted to make a taxes video, like I said, around everything and how to easily set this up if you're serious about print on demand and, frankly, any online business for U.S. citizens. So let's go ahead and get started. This was just an article around the rule, the 1099 rule. But once again, let's go ahead and start at the top. So every contractor who's running a self-employed business that is considered a sole proprietorship, and I'll explain what all those things mean in just a second, will be filing a Schedule C Form 1040. Okay, so there's different kinds of forms, all right? There's different forms for different purposes, especially different kinds of 1040 forms. You can see them here on the IRS website, but this is what we call a Schedule C. And a Schedule C is a sole proprietorship form. If you have an LLC and you are a single member LLC, okay, then you are filing this form. It's a profit and loss, essentially, statement, business profit and loss statement that bases on your taxes. See, people have to understand what an LLC actually is for single members. What does this actually mean? A lot of people say an LLC is a good business to start. It's a good business. It's a good business. It is. For single members, what an LLC is it is legal protection to separate assets from the identity from the business. That's what the whole purpose behind this is, okay, of an LLC. So a S corp creates you as the employee in the business. Now, the difference here is that when you get taxed as a sole proprietor, you are not a business. You understand? So first thing is, yes, you should create an LLC. Why? For protection, for legal protections. Now, in order for legal protections to actually exist, there has to be no commingling or intermingling of finances. How does that work? That means you have an LLC business and you open a bank account with that business, okay? When you create a LLC, you have something called the Articles of Organization. You get your EIN number, okay? And these are in for, and you also get a submission from the Secretary of State, a signage that basically allows you to operate business under an LLC. You take that information, you go to your business bank account, and by the way, I already stated what is the best business bank account. I made a whole video on it, and it's an online bank account where all the money goes straight into your account online. It has a lot of different integrations. It has absolutely zero fees, no matter how low your balance goes. So it's literally the best bank account. I'll leave a link in the description for it if you want to see that video. And I'll also leave a link in the description for you to join the business bank account. But once again, in order for you to join, you have to have the things that I said, the articles of organization, the EIN number, etc. Now, you might be saying to me, how do I actually get that stuff? Well, you have to create an LLC. You have to form an LLC. So let me just pause my screen. Let me take you to the place of how you can actually form it. Okay, so what you're seeing on my screen right here, right now, is the platform where you can create your LLC for a $0 fee. So you're not paying extra to form it. Let me explain, first of all, the creation of the LLC. Once again, what is the purpose of LLCs? The purpose of an LLC is to separate from for legal protection purposes the individual from the entity. Meaning, if I create a design, let's say that it infringes on Dragon Ball Z, okay, and Dragon Ball Z wants to sue me, they can only access my entity business holdings and operations. They cannot access my personal stuff. So if I own a house, if I own a car, if I have millions of dollars in the bank, they can't access that. They can only access what the LLC is operating under, okay? Once your LLC becomes a significant size and you make a lot of money from your LLC, then it's time to open up a holding company that holds the assets. But that's a whole different video for a different time, and that's really a higher level of accounting. So like I said, we'll talk about that a different time if that happens. But anyways, first step is to open the LLC for legal protection. This is a must, and it costs next to nothing. This is literally, you're saving yourself for the cost of 40, 80, 50 bucks. You're saving yourself a world of trouble in the future just in case. And the thing is that people say, oh, well, what if I don't infringe? What if I don't make mistakes when I open an LLC? Or why do I need to open an LLC if I don't make mistakes? Here's the thing. You can be sued frivolously, meaning it's for no reason, for no meaning. We live in a litigious society today. Everybody's suing for anything, okay? So, I mean, I don't want to even start giving examples because this video would be too long, but anyways, so first you come here. I'll leave a link in the description. You're going to select LLC. Now, the reason why the LLC is the easiest to form is because S Corps and C Corps and nonprofits are extremely complex from a tax standpoint. And if you're a beginner and you don't make more than about 50 to 100 grand a year, you don't need to be forming any of these. And when I say 50 to 100 grand a year, I'm talking about on the actual business, not on your job, not on, you know, what you get as your W-2. I'm not talking about those. I'm talking about the actual business, the side hustles, the print on demand, the websites that you have, the Shopify stores, things like that, okay? So LLC is where you're going to start. You're going to select your formation. You're going to hit start my business. Now, something I do want to point out, I recommend going with the cheapest plan, the silver. It's easy. I mean, obviously you could go with the higher plans if you really want, but you don't have to pay any fees except for your state fee. So a lot of people don't know this, but in order for you to actually get your LLC approved, every state has a fee to get it approved. All you have to be is a U.S. citizen. You have to like enter your social security number, things like that, and then you get the LLC approved. But you have to pay the state to be able to approve it in for whatever state you're adding the LLC into. So, for example, if you own properties, right, it's a wise decision to have each property under one LLC. So if I own 10 different houses, I'm owning 10 different real estate, I own 10 different houses, 10 different real estate properties, I should have 10 different LLCs, one for each property for protection. Once again, the whole purpose of the LLC is protection. I wouldn't put all 10 properties under one LLC. That's not wise because one person can sue me from, a renter or whoever, and they get access to all 10 assets. That's not wise. Once again, the whole point of the LLC is for protection, all right? So once you got that handled, you can go with this silver package, and I'll show you kind of what you get. And once again, LLCs are a must if you're operating businesses, okay? I'll give you one example. Luke Combs is a singer, okay? Luke Combs sued print on demand seller, okay? This is a thing. This actually happened. It's a $250,000 lawsuit. A woman got sued because she used a quote on a t-shirt that was sang by the guy Luke Combs, the singer, okay? So this happens. I mean, you could look into it. It's there. But anyways, that's not the point. You see, if this woman had an LLC, she wouldn't have to worry about these kind of issues. She has a house, she has cars, she has money in the bank. She wouldn't have to worry about that. But anyways, okay, let me kind of show you things here. The EIN, you can get yourself for free online. You just search, EIN creation, IRS website. You go ahead and create that. These forms, you don't have to worry about this. Banking resolution is a document to set up businesses that can elect a business to do banking with. You don't have to worry about this either. You're going to get all the necessary info when you sign up for the cheapest package so that you can open up a business with. Okay, so you could pay for the extra stuff. It's really not needed. Once again, I repeat, it is not needed. Okay, but the cheapest plan is good to go. All right. The only thing you would have to do with the cheapest plan is then go get the EIN after you create the business. But regardless, That's free. It's easy to use. It literally takes under 2 minutes to create. And you need an EIN to open a business bank account. So after you sign up for your creation of your LLC, and this is a little thing, there's a bunch of different companies that can do LLC formation for you, but a lot of them charge a lot of fees. So LegalZoom, for example, does charge you fees on top of state fees, on top of register agent fees, on top of all kinds of fees. Okay? So this is the cheapest company here. I'll leave a link in the description, and it will literally say sign up, or it will say something like LLC formation, something like that. Okay? So that's the next step. Okay? So you got to form the LLC first. Now it's time to create the business bank account. Once again, I'll repeat this again. I have already made a whole video on business bank accounts, the very best one, okay? Because it integrates with Shopify, it integrates with Stripe. It has built-in discounts, built-in things for website building, all kinds of stuff. It also has tracking on a month-to-month basis, analytics that control money going in and out of the account, and it's fully formed online, okay? So if you ever want to get access to that money, you literally just send it to your personal account. Okay, so that's how you do it. Anyways, so now at this point, this part into the video, you have your business bank account, you have your LLC, you have your EIN number, you have all that stuff. Now it's time to work on the taxes, which is what you're going to be handling is the Schedule C Form 1040. Okay, so let's talk about why this is so important. I have a YouTube channel that pretty much everybody here does not know about called Wealth Crafters Institute of Freedom. So let me just show you here. Wealth Crafters Institute of, let me just hit enter here. Boom. This is the channel. And yes, it doesn't have a lot of subscribers, but one of the videos here that I said is that there are 4 types of individuals in the world. Okay, you have big business, you have individual sole proprietors, you have, I'm not going to go through the list, but the point is, if you're an employee, right, if you're a W-2 employee, and you could go watch the videos, Rich versus Wealthy, 3 Stages to Wealth, how banks make money, things like this. Anyways, when you're a W-2 employee, you're going to be taxed the highest. This is something everybody needs to understand. Taxes is going to be your highest cost, okay? So what you're going to do as a Schedule C 1040 is you're not a W-2 employee. You're a contractor. This is why, like I said, the new law or the new rule that Biden came out to convert contractors into employees is actually a shot in the foot to most contractors. But anyways, what you get to do and what you have the right to do as a 1040 individual is that you get to deduct your expenses. You also get to reduce your taxes. Why? Because as a contractor, you're responsible for materials, products, you're responsible for a lot of different things that normal W-2 employees wouldn't be responsible for. I'll give you an example. If I'm a teacher and I go teach in a classroom, there's a desk there, there's chairs, there's a smart board, there's all that, right? There's a chalkboard, right? They have all that for the students, and I get to use that as a teacher, and I don't have to pay for those things. But if I'm a contractor and I'm creating my own business, right, and I'm teaching students myself, then I have to pay for those things. And if I pay for those things, I get to deduct them from my taxes because it's a business. Does that make sense? The W-2 employee as a teacher does not get to deduct pretty much anything unless they're hopping into real estate, which once again is a completely different video for a different time. If you want to learn more about real estate and money, go to that channel, okay? But the point is, the channel that I showed earlier. But the point is here is that W-2 employees do not get to really reduce taxes. But 1040 Schedule C 1099 contractors are. Now, who actually fills out Form 1040 Schedule Cs? People who receive 1099s. So every single time you work on Redbubble or TeePublic or PayPal or whatever, you're getting money through these things, you're receiving 1099 documents. These 1099 documents are sent over to the government to say, hey, we have this person with the name XYZ, with the social security number, blah, 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 and they've made X amount. And so the government knows, okay, you made this amount. Let's see how they file the taxes. So how do you get to deduct, right? There are places where you're going to say, okay, I made X amount, I made this amount, right? Like line number 7 here, gross income, right? Gross profit, things like that. However, this is where you get to deduct. You have 2 places where you get to deduct. This is the most important thing you need to pay attention to here, because this is where the money is made, okay? Or essentially the money is saved. That's a better word. Part 2, expenses. You have expenses from line 8 to line 27B. All of these expenses need to be accounted for, every single one. And we're going to go through the list now and explain some of these expenses, once again, in the American tax code, okay? So this is a federal income tax report as well. So this is not state tax, this is federal, all right? So number 8 is advertising. Advertising, they define it in many ways, okay? It could be as simple as paying for a Google ad, but it could also be as simple as running an event to promote your business. There are different costs for advertising, okay? And it's actually pretty deep, but there's a lot of things on advertising. For example, you have an Etsy store, okay? And you go to a trade show and you start giving out stickers with your Etsy store name on it. That is an advertising cost. Okay, so you got to pay attention to advertising. It's not just as simple as, PPC or CPC ads. And trust me, I've done it all. I don't do trade shows, but you get my point. I've done it all from an ad standpoint, paying for Facebook ads, Google ads, etc. Okay, the next thing, car and truck expenses. Let's use this as an example for print on demand or stock photography. If you're a photographer, for example, you go out with your camera that you paid for and you take pictures of the mountains. Well, you drove a certain distance to shoot those photos. Well, you get to deduct certain expenses for your vehicle. Now, if the vehicle is for business purposes only, 100% business purposes, that fits under something called Section 179. Section 179 has 2 main purposes: deductions of heavy machinery, which are vehicles. Vehicles are one of the things that are heavy machinery, and also other business-related expenses that are not on this list. So what is Section 179? Section 179 in the tax code basically states that, hey, you as a seller, as a business owner, as a contractor, right, as a sole proprietor, you have expenses and you can deduct them under certain rules and certain circumstances. For example, if a business vehicle weighs over 6,000 pounds and is 100% for business use, the cost of the vehicle in the year 2024 can be deducted up to 60% for that year, fully 60%. Last year was 80%. The year before, it was 100%, okay? These vehicle deductions, for example, but it must be for 100% business use, okay? Let's say, for example, you're using a vehicle as a marketing prop. Well, then in that case, it's not actually a vehicle, it's a marketing prop. Your purpose is not to drive it to places, it's a marketing prop. So for example, if I bought a Lamborghini and I tell you, hey, buy my course, well, obviously that Lamborghini is going to create trust. People are going to look at me and say, okay, this guy knows what he's talking about, and people will go buy the course. Ty Lopez does this. If you guys are familiar with people from Fresh and Fit podcast, they do this. There's a lot of different businesses where even Graham Stephan did this. He ran an ad with a Lamborghini telling people that, hey, join my YouTube course at the time. He had a YouTube course. I don't know if he still has it, but these are marketing props, and these cause the influx of business sales. Now, the only way you can actually take deductions, guys, from these lists from both Section 179, which I will show you how to do that, and here on the 1040C is you actually have to have a business income. You can't just reduce something or deduct from something that doesn't actually exist. You have to have a business income. So for example, if I have a a pizza restaurant, right? And I buy 100 new chairs for my pizza restaurant, that would go under Section 179. A lot of people think Section 179 is just purely for vehicles, and that's not true. Section 179 has to do with items associated with the business that is both heavy machinery and items that do not fit on this list. So how do you actually form a Section 179 form? Well, it's not called the Section 179 form. It's called the Form 4562 form, okay? So if we go over here to the IRS website, and we go to the form, this is called Form 4562, which is Depreciation and Amortization Form. Now, why is it called Depreciation and Amortization Form? I'll tell you. The Depreciation Amortization Form, aka Form 4562, is a form, right? And I should actually be selling this as a course, but I'm not going to. But is a form that is responsible for all property of the business. That's why if you look here, it doesn't really mention property too much here. A lot of the things that are paid for as deductions here are expenses in a business, not really property. And property does fall under expenses, but you have continuing payment expenses, and then you have property expenses. See, the IRS tax code looks at property as if it's something that is used for a longer period than the duration of its payment. So it has to be managed in a proper way. So as we go through this list here, guys, of these deductions, I'll kind of go through certain products and certain things as examples, and I'll tell you how it would be filed here on the Form 4562, Depreciation and Amortization. The first thing you have to understand is after these expenses, the list here, you can deduct property of up to a value of $1.160 million. So what is that? That's $1,160,000. In certain circumstances, depending on the business, you can deduct up to $2.2 million or I can't exactly remember the exact number. I think maybe 2 million something, but that is for a different circumstance once again. So for most cases, we will play with the $1.160 million number. Okay, $1,160,000. That is for property. So once again, if I own a pizza restaurant and I'm buying chairs and lights and this and that, and the cost exceeds 1.160, I can only deduct up to 1.160 million from what I'm actually making. Now, it's important to understand that when utilizing a depreciation and amortization phase out of your purchases versus a full deduction, that is the difference between a tax refund and a tax deduction. Now, if you are depreciating your asset or your property, if you're depreciating, meaning if I buy a bunch of chairs, a bunch of lights, and I say, okay, over the years I want to deduct it instead of deducting it all right now, then I can potentially qualify for a tax refund later down the road if the costs exceed the operating income of the business, the gross income. If I'm in a situation where my costs do exceed as well the income, however, I am not amortizing and depreciating, but I'm taking the whole entire deduction up front because it's under the 1.16 million, I do not then qualify for a refund. That's one of the most important things I want you to understand, okay? So let's now get into the information here. So we already talked about examples of advertising. Car and truck expenses. Once again, car and truck expenses are very specific here because there are two ways to deduct your car and truck expenses. First thing to ask yourself, is it fully for the business? If it's fully for the business, then you would be using 4562. If it's not fully for the business, if it's like, let's say 50-50, then you would count things like mileage, and you actually get a deduction for the amount of mileage that you take. So if I was to, let's say, drive in a, Toyota Camry to a certain spot, and that's my car, and it's paid for example, then I get to deduct every single mile that I drive to the spot that I'm going to go shoot pictures at or go work at, right? Now, driving to the workplace is not a tax deduction, But when you're at the workplace and you need to travel for business using the vehicle, that's the deduction. So there are specific rules around what you can deduct. Certain expenses for the car, and this is why I say I highly recommend you keep your business first. If you have a vehicle, let's say that's purely for business, which is a great idea, right? You can deduct things like the oil changes, you can deduct the brakes, the tires, the whatever. Now, if you're leasing a vehicle, right, you can deduct the full payment of the lease, once again, being that the business is the 100% sole user of the vehicle. If the vehicle is 50-50, then of course you cannot deduct the full cost of the lease. If you purchase the vehicle and it's purely for 100% business use, then you get to deduct also, but unfortunately, that vehicle needs to be depreciated over time. So it's not unfortunate, but that's just the way it is. Okay, so let's just surpass that. Let's go to number 10, commissions and fees. Let's say you're a print-on-demand seller and you have a course. Let's say you put out a course on teaching people how you've designed for a celebrity, okay, a bunch of t-shirts. And other people want to promote your course and you pay them commissions. Here are things where you would mention your commissions and your fees, right, to operate that business. Who are you paying out as commissions and fees? Contract labor. Let's say you're going to hire a freelancer, okay? That's contract labor, okay? That's the cost of hiring contractors. Let's talk about depletion. Depletion is one of these things where you have resources that get depleted. I don't want to go too deep into this because for print on demand, it doesn't necessarily relate. It's more for other businesses that use resources. So let's not really talk too much about that because for us, we talk about computers, we're using mice, things like that. So depletion is not really one of the things I want to approach. Depreciation and amortization, section 179 expense deduction. Once again, this is for property that does not fit under this list. Once again, I'll use the example. If I own a print-on-demand business, and let's say I hire a bunch of my friends to come work for me, but I have to buy a bunch of computers for them to work on, well, that's business property. We're not using that for fun. We're not using that to play games on. It's purely for business. Those are property that's deductible, but it has to be mentioned on section 179. And once again, when you use form 4562, which is the utilization of section 179, you get to choose. Do you want to choose to deduct something fully, right? Or do you choose to take amortization and depreciation over time? Now, once again, there are some rules depending on what the item is or what the property is that you can deduct. There are certain rules that say, hey, no, you can't deduct this immediately. You have to do this over a period of 5 years, things like that. For people in the real estate game, you know that when you buy a property, you get to deduct the depreciation over 27 and a half times, meaning you take the property value, you divide that by 27 and a half, and that number is the amount that you can deduct off of the property's income every single year, okay? Why do they allow this? Well, because they know that properties have upkeep cost, right? These properties cost money on a monthly basis, on a yearly basis, and they need repairs and maintenance. And depreciation is basically entropy. Things break down and things depreciate in value, and the only way we can keep it at a maintenance level is by constantly repairing and fixing. That's why they come up with the number 27 and a half, okay? But anyways, this is print-on-demand businesses we're talking about. We're not talking about real estate, so this is, let's stick to a topic here, which is really my fault. But employee benefit programs. If you're not having any employees, you're not electing as an LLC, you're a sole proprietor, you don't have to really worry about this. In fact, I would actually recommend you, and this is what I do, is I have a number of people that work for me, right? Just on my print-on-demand business alone, I've had consistently 4 people, and then I've had on and off another 2 or 3 just for print on demand. That has nothing to do with my writing business, the blogging. That has nothing to do with my websites, nothing like that. Just simply solely print on demand. That business side of things, I use contractors. I do not use employees. Now, for employee benefit programs, there are a lot of different types of benefit programs. There are certain insurance things. There are certain bonuses, things like that you can give to employees. But once again, probably the people who are listening to this don't have employees, they have contractors, which is something I've spoken about before, hiring virtual assistants, not employees. It's much different. They don't get a guaranteed salary. It just depends on the work that they do. If they want to work more, they can work more. All right. But anyways, the next one is insurance. Now, insurance, it says other than health. Now, what kind of insurance can you actually pay for that's a deduction? Well, insurance on property. So, for example, if I'm paying for insurance on a computer, that can work. If I'm paying for insurance on protection for my print-on-demand designs, just in case if I get sued or anything like that, that can work. I'll give you an example. CoffeeZilla, he's a YouTuber. He pays for insurance because he makes these scammer videos where he basically just exposes people. Well, some of these people sue him back. And when they sue him, he has insurance that can protect him in that event. Pay for his lawyer fees, pay for his protection, pay for any kind of things that he might have to pay for, like defamation or anything like that, right? If the lawsuit comes out not in his favor, the insurance will pay for that. That's the whole point of the insurance. So these are insurance fees that other than your health insurance, okay? Now, mortgage, things like this, you can deduct. How can you deduct your mortgage? Well, the IRS tax code specifically talks about having an area of your house that is secluded only for business. You cannot have personal property in there. You cannot have anything other than business use. So, for example, if I have a 4,000 square foot house and I allocate 1,000 square foot purely for the business, a room in the house or a certain level in the house or a certain place in the house that's purely just for business, zero personal use, well, that's a 25% of the house. So I get to deduct 25% of that mortgage for the house. I get to deduct that. So if I pay $4,000 a month for a mortgage, for example, and I'm using 25% purely just for business, well, then I get to deduct $1,000 a month off of what I've made, okay? So that's a big thing right here. Legal and professional services. Well, the legal services, lawyer fees, things like that, I mean, we've all been there, right? So those are things that you can deduct as well for your business. Office expenses. So office expenses, a lot of people think it's like redoing the office and things like that. I believe the tax code limits it to $2,500. You can't have any more than $2,500 worth of office expenses, which I believe is actually, I could be wrong, but I think it's like things like, actually, I was going to say supplies, but the supplies has its own thing. Office expenses. Let me pause the screen and let me just double check real quick. Okay, so I did just indeed check on office expenses, and I guess there's a little intermingling with supplies. They are slightly different, but costs to run an office. So, for example, a desk, right? If you have an office, you're going to have a desk, you're going to have lamps, you're going to have computers, some small things like that. Those consider office expenses, which are actually different than supplies. So supplies is like copy paper, staples, things like that. These are things that you can deduct, once again, as long as it's for your business. Here is rent or lease of vehicles, machinery, or equipment, other business property. Let's just say, for example, I have a business where, once again, I have a restaurant. Now, for the print-on-demand business, this doesn't necessarily apply, but let's just use this circumstance of a restaurant, and I'm going to put up a sign. And instead of hiring a company to put up the sign, I decide to rent a little crane, and I put up the sign myself. Well, that's rental of equipment that I could potentially deduct here because it's directly for the pizza restaurant, for the business, right? So that's an example. Repairs and maintenance. Of course, there are certain repairs that you're going to do in the business. Once again, if let's say you're working in print-on-demand business in your house, something is broken, you need to fix it. Let's say you have a DTF printer, direct-to-garment printer, it needs to be fixed or something like that. Boom, that's an example of a repair or maintenance, okay? Travel and meals. Okay, so here's the thing. This is one of the next category, travel and meals. So travel and meals are specifically for the purpose of a business. Let's tackle meals first. Meals in the prior years, you were only allowed to deduct 50%. Currently, you're allowed to deduct 100%, and this was post and during COVID, you're allowed to deduct 100% of your meals for business purpose. What is a business purpose type meal? Well, obviously, every business is a little bit different, and certain circumstances do apply, but does it directly, how are deductions considered a deduction in the tax code? There's two things. Is the expense ordinary, and is the expense necessary? For example, if I'm a print-on-demand individual who takes pictures of food and posts that on t-shirts, well, then in my case, it's an ordinary expense, and it's a necessary expense. It's part of my business. However, the tax code doesn't actually consider deductible meals in this way. What they do is they say, okay, the meal that you're paying for business conversational pieces, so for example, you meet up with a business person and you pay for your own meal, that is a deduction of a meal that you can actually take. So there's specifics as to what you can take for the business meal and purposes behind that. There's different ways to classify things. Like if I was a YouTuber food reviewer, technically that's not a business meal. I wouldn't be, that's a different cost. It wouldn't be considered a meal though. It would go under a different category. So once again, and like I said, there's a lot of people who will admit that certain things can fit in different circumstances, different categories, and that's why it requires some understanding of the tax code. Travel. Let's talk about travel. So if you're traveling for a business conference on print on demand, the costs for that conference are deductible. The costs to travel there are deductible. It's important to understand that that day at that business experience, the travel, all things associated with that day are deductible as long as they are not for personal use. So if I'm going out with my friends after and going for a drink or going for some meals, that's not deductible. But if I'm going for business purposes, it's 100% deductible. And these are for business travel. So once again, if there's an event or if there's a networking thing that you could do, or if you're going to work with some print-on-demand creators together and put something together, and you're going to go fly out to their country or their state, those things are deductible, okay? And it's business related. Okay, and we're trying to refer this back to print on demand because pretty much everybody watching here does print on demand, but there might be some people watching who don't do print on demand but still want to learn this kind of information. Okay, utilities. Utilities are one of those things that come with the cost of your house, your property, right? So if you're utilizing, let's say, some utilities for that print on demand business, right? Let's say you're using electricity, you're using internet costs. These are the heat cost. These are different things that you can deduct once again. Wages, not paying wages here, other expenses, and then energy efficient commercial buildings deduction. Okay, now let's move over to section 179's deduction, depreciation, amortization. We covered a lot of this already, but I'm not going to go over some of the stuff that doesn't relate to print on demand. But I'll give you an example, okay? If I, let's say, want to create a t-shirt of a Lamborghini, and I want to take some images of these Lamborghinis and I want to license them out to other print-on-demand sellers, and my game plan is to take photos of that Lamborghini and hire an editor to work on it, right? Well, there's a few deductions that can happen in that circumstances. The editor that I hire could be a contractor. The cost that I would have to pay for that person to do the actual work, or a hire photographer, those costs can be deducted on the Schedule C. If I was to pay for a camera equipment, that can be fully deducted as well, right? And that would fit under property, so it would fit under this form, property. But let's just say I need to rent out that Lamborghini for an hour or two to take pictures of it. Well, in that case, that is going to be under rentals, right? And the purpose of that is for creation of that design or the photos, right? It's the content. And so, like I said, there's different things that you can deduct. Let's just say in my print-on-demand business, I purchase 10 computers, 15 computers, and I start hiring contractors to come and work on those computers. Well, that's business property. Once again, it's not going to be used for any kind of personal property. That property can be deducted as long as, once again, all the property when added up together is less than that 1.160 million number. So 1,160,000, as long as it's less than that, and it can be deducted. So that section 179 is really three components, not two. People think it's depreciation and amortization. It's depreciation, amortization, and deduction of business property. Okay, so once again, you can choose to deduct things over a period of years, or you can choose, and once again, it depends on the item, it depends on the property, right? Or you can choose to deduct it fully. If you deduct it over a period of years, that is called depreciation and amortization, or really it's amortization. Depreciation is a little bit different, once again, but amortization, you're amortizing the spend, right? The expenditure of that cost of that product over a number of years. And that can result, like I said, in a tax refund. However, once again, this is the big however, if you do not use amortization and depreciation and you use full deductions with the allowance of Section 179 for very specific property, well, then you cannot qualify for refund. You can qualify for deduction. Okay, so that's important. If for print on demand, I buy a bunch of keyboards and mice and cameras and notebooks and all kinds of things like that, desks, that's deduction of property. I can do that. That's part of the business, right? So these are all things that are associated with. And that's pretty much it for the print on demand side of things. We didn't cover things like stocks and ETFs and dividends because that's not related to print on demand. If I would cover that, I would cover that on the other channel. I really wouldn't cover that here. This is not the place for that. This is not a finance or money channel. This is a print on demand channel. But more importantly, hopefully this video helped you out. We've been recording for 41 minutes here, and I want to be clear, okay? I just want to revamp real quick. Or not revamp, but I want to reiterate this. The first step is legal protection. Go get the LLC, okay? And like I said, this is the cheapest resource as to how to get it. Okay, I'll leave a link in the description where you can get the LLC for 0 fees on top of your state fee. You see it right here. Okay, $0 state fee, $0 plus the state fee. So all you have to do is pay for the state fee. The state fee in Illinois is different than the state fee in Missouri. This different than the New York fee, different than the California fee. It's all different. Okay, so every state is a little different. Once you pay that fee, you get your LLC put together. It'll take about a week or two. You get all your it could actually take about, honestly, it'd take like 3 days. But once you get all that information together, then you head over to the link in the description for the business bank account. Okay, that business bank account setup is very important because, once again, you do not want any intermingling. No intermingling of the finances, of the money. The business stays business. The personal stays personal, okay? Speaking of expenses, you probably want to get some business credit cards, maybe even just one, for accounting purposes. All those business expenses going to be on that credit card. At the end of the year, the credit card company will most likely segment it for you and tell you, okay, X amount was in utilities, this amount was in, groceries, this amount was in this amount was in that, and you can deduct certain things from that. So it's accounting purposes. But once again, you need that LLC. After that, you get the business bank account. Then you get the business credit cards. And why do we use credit cards over debit cards? First of all, we exercise personal discipline here. So if people say, oh, credit cards are bad because you're going to go into debt. No, credit cards are not bad. People are bad. They don't pay back their debts. Okay, so you never carry a balance on the credit card, but you pay it off. The point is that you have your business credit card. You get your bonus cash back, you get 5x on flights, etc., and you use those points for later down the road in your life for traveling or whatever, which is great. If you don't like traveling, then you could get Amazon gift cards, whatever, points back anyways. but mainly the credit card purposes for accounting. Okay, that's the most important thing. But accounting, and then you have the business bank account, okay, and then you're going to operate the business, then you're going to form the Schedule C, and you're going to do your Section 179 if you happen to have expenses for some property that you can deduct. All right, so that's essentially the game plan for print-on-demand sellers. Now, for a different video, like I said, for a different time, we can talk about what the Biden administration has put into place this year. This is literally the first time in human history this has happened, okay? Where there are now basically stating that people who are 1099s under a new set circumstances will be deemed as W-2 employees. So, for example, if you're an Amazon seller as a 1099 folk, meaning you get to use Schedule C and actually deduct stuff, they might say, depending on the circumstance, they might say, "Hold up, you're not a 1099 no more. You don't get a 1099. You don't get to form a Schedule C for this. Here's your W-2." Now, if they give you a W-2, you could just kiss America's freedom goodbye, because you're not going to be able to deduct your expenses as a contractor. That's why a lot of people who are doing Uber, Lyft, they got big problems coming soon, because they're paying for their own vehicles, they're paying for their own tires, they're paying for their own gas. Lyft and Uber is not paying for those things, and they don't want to. They don't want that liability. So the Uber, Lyft, and whoever, all these drivers, they're paying for things, right? They might be paying for mints in the car. They might have phone chargers they pay for. All those things they get to deduct on top of the mileage, on top of the vehicle, assuming it's for business only, on top of the wheels, on top of the tires, the all that. They get to deduct all that. But like I said, with the new Biden rule, technically, based on the way he's considering what an employee is and what a contractor is, technically those contractors are considered employees. Now that sucks. Like, people don't understand how bad this is for America, which, the Biden administration has done a great job at that, screwing America from top to bottom. But basically, people like me and you who work hard for our money, you're not going to be able to deduct anymore from your taxes. What you're going to do, if you're Uber, Lyft, whatever, you're going to have to actually pay the cost for your vehicle, pay all this side stuff, and you don't get to deduct it, So, hopefully that doesn't, the law already passed. It's not a matter of if it passed or not. It already did pass. It's just now a matter up to the business what they consider you as. And based on the election that they consider you, then you get to either deduct or not deduct. So, certain circumstance for certain folks, guys, this is one hell of a video. It's very deep. I could probably talk about this stuff all the time, but hey, I wish you guys all the best of luck, and I'll talk to you guys soon, all right? Thanks for watching. Peace out. Bye. If you have questions, comments, concerns, leave them down below. I'll see you soon. Peace out. Bye.